Apple shares are under pressure. They're off their worst levels from last night, but right now down by about 1.8%. The company reported third quarter results that beat the street's expectations. The services unit actually grew 8%, hitting a new high of $21 billion in revenue. But overall sales were down 1%. And Apple's CFO said that the company expects a decline in sales in the current quarter as well. Joining us right now is Wamsi Mohan, who is Bank of America Global Research Senior IT Hardware Analyst. And Wamsi, okay, services looking great. The big question has to be what happens with hardware. What do you think?
Yeah, good morning, Becky. Thanks for having me here. Yes, absolutely, right. We've seen a transition in services that had declined now for 3 or 4 quarters in a row, starting to reaccelerate back. But products have just been weak. And products have been weak for macroeconomic reasons. It's because the upgrade cycles have gotten pushed out. We heard from the CEO yesterday that the U.S. smartphone market remains very weak. We've seen China struggle a lot. We've seen the sort of overhang from the excess shipments that we saw both for iPads and Macs over the last few years during the COVID pandemic. Right. So we've got a lot of elements that are just renormalizing now from a hardware perspective. It's going to take some time to revert back to growth. And although for next quarter, the iPhones are supposed to accelerate a little bit, right, and we'd take that as maybe a point or two of growth, iPads and Macs are still going to be down. Wearables are still kind of in a tough place. So it's just going to take a little time for us to work ourselves out of this soft spot in demand, particularly on the hardware side.
You've got a neutral rating on the stock, but I think your price target is 210, which is above where it is now at 187.
Yes. So. Yeah. The way we think about it is a 12-month out price target.
Okay.
And when we think about like what determines that, it's really the pace, rate and pace of estimate revisions. And what we've seen so far, actually, it's been a very interesting year for Apple. From the start of the year, or maybe a year ago, people were forecasting about $7 in earnings for fiscal 24. That's come down to about $6.50. In the meantime, the stock actually has moved from a 150 level up to 190 or 195. So there's been this disconnect, which has been really driven by multiple expansion. And I think that's happened for a variety of reasons, including, just very strong cash flows that they demonstrated again. It's just this knowing the fact that the growth is just not as volatile as for a lot of other companies, even in the face of a downturn. And this multiple expansion has been fairly unprecedented, relative to the market over many years.
When you look at China, you did say there was some weakness there, but it also looked like Chinese consumers were willing to pay more for their phones. And that's a different sort of scenario, too. You expect that to continue?
Yeah, Becky, I think China is a very interesting smartphone market in that there is very low loyalty and very high churn, typically. And that comes because historically, the thing that keeps you with Apple, at least in the U.S., and I don't know, my kids, I can talk from personal experience, everyone just uses iMessage. You want iPhotos. You want to be able to
you want to be in with the game.
You want to be in. And I think that when you think about that as a lock-in factor, it's not in China. Everyone's on WeChat. So there is this tendency to actually switch phones on a more regular basis. However, what we've seen lately is that there's been very good sales of the Apple Watch in China, and there's no other competing product out there because Huawei has really struggled. So the lock-in is actually coming more from the ecosystem in China, which means that now you're actually getting a little more of that tendency to stick with Apple once you're Apple, and that's something that's new in China now.
I just have some basic questions. Is the global or domestic smartphone market shrinking? Is Apple losing market share?
No, Steve, not at all. Apple has actually been a very strong market share gainer. If you look at the overall smartphone market in China in particular, It's been horrendous. So you can see that on the Android side of the world, it's just been shrinking now for many quarters.
So it's not losing out to Android and the innovations that with the folding phone and that kind of stuff.
No, not at all. Not at all. I think Apple's done a phenomenal job in convincing consumers that the spread between a 14 and a 14 Pro Max is shrinking in terms of the amount that you would pay on an installment basis per quarter, right, or per month. And so what that
people to upgrade.
Yes, and so people are just moving up the spectrum.
Next thing. Is Apple TV registering at all? Is it a big loser? Where does that stand? Is that any potential for the company?
Yeah, if you think about overall services, right, we're talking about $80 billion of services revenue. we're talking about less than $1 billion for Apple TV Plus. So it's moving in the right direction, actually. They do have a lot more content now than they did before, but streaming is just under pressure right now.
I'm binging something on Apple TV now. That's why I asked.
Okay.
I wish I had a business that was just under $1 billion.
It didn't matter.